$69. That's the number analysts are calling the pivot from shortage to surplus. And the market just traded through it in a single session. Brent crude closed the week at $72.60, after a 3.8% plunge that shoved price below every meaningful moving average: the 5, the 10, the 20, the 50, the 100, and the 200. The weekly RSI is at 27.9, the deepest oversold reading of the year. And yet this week's biggest trap is not the oversold bounce. It's believing that the truce headline out of Doha is the end of the story. Right now, the chart is screaming one thing: we are in a strong sell structure that can punish anyone trying to catch a bottom before the weekly calendar gives permission. Over the next 12 minutes, I'm going to give you the one danger zone that defines the next 5 days, 2 Monday scalping setups that work in the first 3 hours of the session, and one 3 to 5 day swing trade that targets the $66 yearly support. Stay to the end. If 71.56 breaks this week, the whole monthly structure resets, and next Sunday's video will be about something much bigger than a surplus correction. On-screen text holds throughout. 72.60, the surplus pivot. 2 Monday scalps plus 1 3 to 5 day swing. My 3 to 5 day structural bias for Brent is fading into resistance, with a primary direction that remains lower as long as price stays below the 75.80 weekly support. Turned resistance. We are not chasing the downside at 72 after a 4 standard deviation candle. We are waiting for the dead cat retest zones to reload shorts. The single invalidation level that flips this weekly bias from bearish to neutral is a daily close above 75.80. If that happens, we are looking at a range between 75.80 and 84.84, and the surplus narrative gets questioned. But I do not expect that. I expect any bounce this week to be sold, and I expect the weekly close to challenge the 71.56 support and possibly the 66.76 basement. Write this number down: 75.80. If that level breaks on a daily close this week, the whole monthly structure resets, and the short swing thesis is dead. For now, the herd is positioned massively short but chasing, and that creates a Monday liquidity vacuum, exactly where we scalp. Pull up the weekly chart. Brent printed a massive bearish engulfing candle last week, closing below the 200-week moving average at 83.39 for the first time since the post-pandemic recovery. The MA20 on the weekly is at 84.04, now acting as a ceiling far above. The weekly MACD is deep in negative territory at -6.58, with its signal line accelerating lower and no sign of a bullish divergence. That's the macro pulse. Momentum is confirming the supply shock, and it will take more than one light volume session to reverse it. On the daily chart, the trend is strong sell. ADX is at 48.6, CCI is -183, Williams %R is nailed at -93. Price closed beneath the daily MA50 at 90.36 and the MA200 at 83.39. So every intraday pop is a short covering rally in a vacuum. Now drop to the 4H. The same strong sell structure, but we are seeing the earliest sign of a stall. The MACD histogram has started to tick fractionally higher, while the RSI is flatlining near 28. That subtle 4H divergence is not a buy signal. It's a trapdoor warning that a mechanical bounce towards 75.80 is probable before the next leg down. And on the 60-minute chart, the trend has flipped to neutral. Price is oscillating around a short-term pivot near 72.30, with the MA20 on the 60M at 73.10. That's the first intraday level that will separate Monday's scalp direction. The weekly pivot point sits at 80.84, which is a full $8 above us. This tells you how deeply the structure has broken down. Support levels matter. We have S2 at 71.56 and S3 at 66.76. Resistance is stacked. R1 at 84.84, but more immediately, the old weekly support at 75.80 is now the major supply zone. Everything about this technical picture says that any rally towards 75.80 is a gift from the algorithms, not a new bull trend. Here's what most traders will miss until Wednesday: the 4H bear flag that will form between $72 and $74, perfectly trapping the first wave of breakout buyers before the flush towards 66. Over the weekend, the US and Iran reportedly agreed to halt attacks ahead of the Doha Hormuz talks. That's the geopolitical heartbeat, the exact opposite of a supply shock. The Strait of Hormuz risk premium just got priced out in a single headline, and now the market is catching up to the reality of a well-supplied physical market. Add to this the analyst note making the rounds. Crude oil at $69 signals a pivot from shortage to surplus. That's not just rhetoric. It's a narrative that will guide institutional rebalancing all week. And then there's the BofA piece highlighting an oil stock offering 12.5% free cash flow yields in 2026 and 2027. That tells you where the smart money is moving, out of the commodity into the equity yield. When the paper market sees flows rotate like that, Brent tends to leak lower between now and Friday's close. The week's calendar is not heavy on hard crude data, but watch for any DOE commentary or regional inventory whispers midweek. The Doha talks themselves may produce headlines on Wednesday or Thursday, and any hint of a sustained ceasefire will further deflate the geopolitical bid. My 1 to 2 week directional lean is for Brent to grind toward the 66.76 support, with any bounce capped at 75.80. The exact event that would invalidate that is a confirmed breakthrough at the Hormuz talks that is already fully priced in? No, if the talks collapse and tensions reignite, then a sharp spike above 75.80 on a daily close would kill the swing short, and we would reassess. But right now, the path of least resistance is lower, and the surplus narrative has just started. Do you think Brent closes below 71.56 this Friday? Comment yes or no. I'm tracking consensus for the week. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching, because these 2 Monday scalps and the 3 to 5 day swing are built to harvest the volatility while keeping you out of the traps. Strategy 1. The Monday opening scalp, scalping, high probability. The first move Monday often punishes the weekend headline chasers. Right now the 4H is deeply oversold, and the 1H is neutral. That means the Asian session will likely attempt a small corrective bounce. My Monday opening scalp is a fast snipe long from the S2 support zone. The trigger: if price retests the 71.56 area and prints a 5-minute bullish reclaim candle, a hammer or a bullish engulfing that closes back above 71.70. I'm entering at 71.75, with a tight stop loss at 71.40, just below the S2 wick. Take profit 1 is at 72.20, right into the 60M MA20 resistance. That's a 1 to 1.5 risk reward, and it's designed to capture the first mechanical bounce before the sellers reload. This scalp is instantly void if a 5-minute candle closes below 71.50. That would signal the freefall is accelerating and no bounce is safe. The Monday opening SCLP entry, 71.75, 5M bullish reclaim above 71.56 S2, stop loss, 71 to 40 take profit 1, 72.20 risk, reward, 1:1.5 R invalidation, void if 5M candle closes below 71.50 strategy 2, the Monday liquidity grab, scalping, counter noise. Once the early bounce exhausts itself, the algorithm will run the obvious stop hunt. Friday's low was around 71.90, so the Monday Asian session will likely trap breakout sellers by pushing just below that level, triggering sell stops, and then reversing hard. My liquidity grab scalp is a short on the failed breakout above the first 1H resistance. Watch the 73.20 level. This is where the 60M MA20 and a minor hourly pivot align. If price spikes through 73.20, sucks in momentum chasers, and then reverses and closes a 15-minute candle back below 73.00, we have a textbook stop run. I'll enter short at 73.00 on that 15M close, placing a stop loss at 73.50 just above the fake breakout high. The target is a quick grab of the nearest liquidity pool at 72.10, which is the Asia session's value area low. That's roughly a 1 to 1.8 risk reward, and it needs fast execution. Warning: this is an aggressive scalp against the 1H noise, so if the 15M candle breaks and holds above 73.30 after the entry, cut it instantly. The Monday liquidity GRAB entry, 73.00, 15M close below 73.00 after a fake breakout above 73.20, stop loss, 73.50 take profit 1, 72.10 risk, reward, 1:1.8 R invalidation. Void if price holds above 73.30 after entry strategy 3. The 3 to 5 day swing now the trade that can run into Friday. The weekly and daily trends are strong sell, and the whole structure hinges on 75.80 acting as resistance. My 3 to 5 day swing is a short from that exact level. Trigger condition. We need a daily close above the 60 MMA20 to show a bounce, and then a rally into the 75.80 zone. I will enter on a limit at 75.70, with a stop loss at 76.50, outside the weekly structural resistance and the top of the bear flag. The first conservative swing target is 71.56, the S2 support, for a partial. The stretch target is 66.76, the S3, which aligns with the measured move of the weekly breakdown. That's a risk-reward of 1 to 3.8 if both targets hit. I'll trail the stop to break even once price reaches 73.50, which is halfway to TP1. The invalidation for the entire swing is a daily close above 76.50. If that happens, the surplus narrative is being rejected and the swing must be closed. This is the trade that captures the core weekly move, and it gives you room to hold through the midweek noise a 3 to 5 day SNG entry. 75.70, limit order on rally into 75.80 resistance. Stop loss, 76.50 take profit 1, 71.56 take profit 2, 66.76 risk in reward. 1:3.8 hour invalidation. Void if daily close above 76.50. Are you scalping Monday or swinging the week? Comments scalp or swing. Let's see who's built for this market. Never risk more than 1 to 2% per trade on Brent. Holding through a potential Hormuz headline on Wednesday means you size down even further on the swing. Stops are non-negotiable, especially the 76.50 swing stop, because if that level goes, the algos will punish overstayers. This discipline is what keeps you alive to trade next week's even bigger move when the monthly structure finally tips. The single most critical level this week is 75.80. If that ceiling holds, the free fall towards 66 is the base case. But if something changes, if the Doha talks shatter and we rocket back above it on a daily close, then the whole monthly trend flips, and I will have a completely new blueprint for you this Sunday. That's the Friday wildcard. If you want last week's crude oil recap to see how we dropped from 78 to 72, that video is live now. Tap the end screen and binge the setup that led us here. Then hit the bell so Sunday's next week ahead alert lands before the market opens, and you get the 66 update the moment it's clear. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that define your week.